Navigate any street market in India at dusk, and you are surrounded by thousands of micro exchanges happening every minute. Watch closely as a customer buys goods. They scan a QR code, verify the amount, and tap pay. In that exact fraction of a second, we can freeze time. To the human eye, nothing is happening. The buyer and the merchant just wait for a success chime. But hidden inside that brief 3-second pause is a digital infrastructure moving billions of dollars at light speed. To appreciate the scale of this invisible machinery, we have to look back to the friction that defined India's financial landscape before 2016. For decades, the vast majority of daily commerce required physical currency passing from hand to hand. Digital transfers existed, but they were severely restricted. Systems processed money in delayed batches or were reserved exclusively for massive corporate sums. Sending money meant navigating a maze of long account numbers and complex branch codes, often forcing people to stand in line at physical locations to complete a simple transfer. When capital is trapped inside isolated, slow-moving silos, the entire economy is physically constrained. Growth is capped by how fast paper and people can move. Let's jump back into that 3-second window. The moment the user taps pay, their request is launched into the digital network. It starts in the payment app on their phone. Platforms like Google Pay or PhonePe provide a sleek interface, but they act strictly as a shell. They hold absolutely no currency. As we see in this UPI technical breakdown, instead of a clunky account number, the user is assigned a virtual payment address, like Rahul at Oak SB. The app uses this address like a digital GPS coordinate. It packages the sender's identity, the receiver's code, and the transaction amount into a single encrypted data packet. Decoupling the user-friendly interface from the heavy security of the actual bank vault was the first necessary step to eliminating user friction. That packaged request flies to the central coordinating layer of the entire system, the National Payments Corporation of India. The NPCI acts strictly as a master traffic controller. Like the app, it never holds your balance. It only manages the routing data. Within milliseconds, the central hub reads the addresses and queries the network to identify the physical banks holding both the sender's and receiver's accounts. It confirms identities on both sides and ensures the connection is valid before a single rupee is authorized to move. By establishing this universal language, the NPCI forces entirely separate competing banking institutions to communicate instantly on a shared highway. Now the routing signal drops down into the highly secured servers of the sender's specific bank. Here, the bank verifies the user's secret PIN. This step happens entirely within the bank's own encrypted systems, completely hidden from the front-end app. This chart outlines the movement. Once the PIN clears, the sender's bank checks their balance and debits 500 rupees. The success signal bounces back up to the central switch and is routed to the receiver's bank, where funds are instantly credited. This zero-delay settlement works because the system is built on top of pre-existing real-time banking infrastructure. The apps provide the slick, lightning-fast interface, but the actual capital only ever moves deep inside regulated, secure bank vaults. 3 seconds later, back in the physical market, the merchant's phone chimes. The transaction is complete. A highly complex, multi-layered data transfer just occurred securely across the country, yet neither the sender nor the merchant paid a single cent in fees. The Indian government and the Reserve Bank of India strictly mandated this zero-fee structure to force massive consumer adoption. But if the transfers are completely free, how do the massive tech platforms providing the apps survive without transaction revenue? The revenue comes from the surrounding ecosystem. Companies charge merchants for physical hardware, like sound boxes, and they use the constant daily app engagement to cross-sell profitable products like loans and insurance. The free payment pipeline acts as the ultimate loss leader. It costs them money to maintain, but they use it to pull hundreds of millions of users directly into their profitable walled gardens. Multiply that single market transaction across the entire subcontinent. Today, this network handles billions of secure, real-time microtransactions every single month. When you remove the cost and the delay from basic financial interactions, you accelerate the economic velocity of an entire nation. Capital flows instantly to where it's needed. By decoupling the user interface from the bank vault, India engineered a digital public good that permanently rewired how 1 billion people interact with their money.